Let's go to some stock picks. Grant, you're going with Afrimat.
Yeah, so they did that big deal where they bought Lafarge. They had a bit of teething problems and they've had to digest that acquisition. Add to that the challenges around ArcelorMittal, limited exports at the port with Transnet. They've had a lot of issues to deal with, but this is a really good management team. I think that is in the price, given where it's trading now. You're starting to see those improvements come through. They're starting to bed down the cement business. They're regaining share in the aggregates. The bulk is starting to deliver. And yes, they've had to close their ferrochrome smelter, but they think they'll get that back online next year. So I think things are starting to turn the corner. There's enough in this last set of numbers that I'm optimistic that a good management with a decent foundation here is going to drive value in this next couple of years in this business. So, on a 2-year forward, it's below 10 times earnings, around 9 times earnings. And I think it looks attractive here. So that would be my pick.
If I can quickly then interject, because a question came through around PPC or Afrimat, and you, they're same but different. You're preferring Afrimat to PPC as well?
Yeah, look, PPC is a pure play, whereas Afrimat has got a few other things going on. They've also got they've even got a rare earths operation that's going to come online in 2 to 3 years. So, but I think the history of PPC, of Afrimat's delivery, in terms of its business delivery and execution, for me is also better. PPC's turned around, it's done well. So I would prefer Afrimat for the diversified earnings that it gives you.
Yeah, diversified. And a management team under Andries van Heerden who are experts at acquisitions and integration, and some potholes along the way, but they're managing it. Jonathan, you're going with Naspers. I noticed this morning that they're listing an ADR on the Brazilian exchange. They've got the One Food business and some other assets there. Naspers, your pick for this evening?
Yeah, so Naspers is still trading at a substantial discount to NAV, although they have closed that somewhat. I think at its highest it was about 40%. It's probably around about 25-30% at the moment. The company also split its shares 5 times, making it more affordable for the average smaller retail investor to invest in. And in the full year results, end of March, the free cash flow was positive for the first time, excluding Tencent. That's basically saying that the other investments, or it shows the other investments, are starting to become profitable, which is a very good thing, and that's what they're trying to do. Price momentum continues to be positive. I was looking earlier, Tencent is up again 3% today. Process is up about 3.5-4%, and that's probably on the basis of what you just mentioned, where Process is going to be launching their Brazilian depository receipt program, and that's because they've got a big investment in Brazil called iFood. It's the biggest food delivery business there. That's just part of it. So we still like Naspers, and we think there's legs still to go there.
Yeah, sorry, and I misspoke. I said Naspers, of course, it's Process who's doing the Brazilian depository receipt, but of course they are absolutely intertwined. That's all for Stockwatch today. Thanks to our guest, Jonathan Fisher, PSG Wealth Sandton, Grayston, going with Naspers. Grant Nader from Benguela Global Fund Managers, going with Afrimat. Up next, the close. Stay watching.
Stockwatch is brought to you by Merchant West. Where others stop, we push further. Because we believe business as usual doesn't lead anywhere new. Go beyond with Merchant West. Finance, invest, insure.